Okay, as we enter a whole new day in trade, let's take a look at the global cues from last night. Unfortunately for us, it's been a bit of a muted session. USA snapped their winning streak yesterday. Major averages closed lower. Early gains were in fact given up and stocks pushed back from their record highs. The Dow and S&P snapped a 3-day winning streak, each falling around 0.25%. The Nasdaq slid more. It fell around 0.40%. The Russell 2000 closed 1.85% lower for a third straight consecutive day in the red, So small cap stocks really taking a beating in the last three sessions. Lawmakers in Washington, of course, while they've agreed to pass a $900 billion bill, there's still a lot of dispute because the House did pass a $2,000 bill as well, which would give checks of $2,000 instead of $600. That has now been blocked. Mitch McConnell blocked Senate Minority Leader Chuck Schumer's effort to fast-track the superior bill. Stimulus payments could go out as early as Tuesday evening, which was last night for most of us. Futures on the Dow were flat this morning, and S&P and Nasdaq futures are also little changed. Asia stocks are taking it on the chin today. The Nikkei in Japan slid 0.3%. Topix is down 0.7%. South Korean Kospi is down 0.2%. ASX in Australia is down 0.9%. Today is the last day of trading in Japan and South Korea. We won't be hearing from them now officially until the new year, which would be day after tomorrow. EU stocks yesterday closed higher. The Pan-Euro Stock 600 was up 0.76%, but it's likely to slide into the red today. Futures already indicate that. We'll be keeping an eye out for those movements as well. Oil moved higher yesterday. Surprisingly, Brent crude climbed 30 cents higher, or 0.6%, to nearly 52, so $51.2 per barrel. WTI crude futures settled 38 cents, or 0.8% higher, at $48 per barrel. Gold prices rose as the dollar weakened thanks to heightened stimulus. Spot gold rose 0.4% to $1,877 per ounce. The metal had climbed as much as 1.3% on Monday. However, it has retraced slightly. US gold futures climbed 0.1% to $1,883 per ounce. So finally, the equity market's taking a bit of a breather. Everyone's been waiting and wondering how much they could continue to rally, while liquidity is staying strong in terms of the fact that we do now have a next round of stimulus, and interest rates are likely to remain low. There's no reason why buying from institutions should necessarily slow down. We're seeing even from yesterday's numbers that FIIs continue to remain buyers here while the DIIs sell. So let's see how the day in trade pans out. It might just be a slightly muted day compared to what we've seen, but SGX still not showing any severe downtick. Looks like 14,000 is still very much within reach.